Okay, good morning, traders. Sorry for being late here. All my fault. And thank you, Scott, for being so patient. Anyway, guys, let's get going here. This is live trading with Scott Pulcini. For being so patient. He will be trading live here. He does it every Thursday at 10 a.m. East Coast time. It's futures trading. And you get to peek over the shoulder of a professional and how he reads order flow and how he manages his trade, his trading styles, his philosophy, his outlook, his mental state on or kind of condition on trading. All really good stuff. He's been trading for over 20 years and was trading large, very large size in the early 2000s. I have Scott's information here. I'll put this into the chat for you. He offers, he has a website, you've got his email, his Twitter, he has a trading room, and he has an educational course that's on our Bookmap marketplace. All right, so, and he's going to be updating that course here soon. Let's go through the disclosures, and then we'll turn it right over to Scott. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, so let's turn it over to Scott. Scott, are you there? And can you share your screen?
You hear me?
Yes.
Yes.
Okay. One second. All right.
Okay, I got it.
Got my screen?
Yes. So
All right.
we're all set.
All righty. Obviously, Armageddon is upon us. The Santa rally is being given the finger. So these are some important areas that we just melted down through. It's basically got one more before the Grinch arrives, and this thing plummets. Let me find my drawer here. Hold on a second. Where's my drawer? There we go. All right, so this market, this last couple days, just nothing trade, and overnight moved into here, failed. This is where this market gapped down from, and then there was other stuff here. So I have these zones, and so I mark my zones at the four more important areas of trading: tops and bottoms of balance areas, directional conviction, high volume nodes. I don't actually draw those zones, but a lot of times they line up with other things that I'm drawing as you go over here, and then buying and selling tails. So anyway, this was an important zone that it failed in. Buying tail, gap up, which is directional conviction, gap down, which is directional conviction, and got in here, failed, and then you had a failed breakout of this structure and just gap down. So I'm going to be drawing a new zone. I don't really need it right now, but if we start to rally, I'll draw it. But this is just giving you information. You know, if this market was truly bullish, first and foremost, we've talked about this. I think we talked about this last week. You know, bigger picture look. This market had a failed breakout, and we did that. So when that happens, markets should do that. This thing recovered, and you expect multiples the other way, which happened, right? So this was looking like that. And then I kept telling I told you guys, and I told my room, kept telling my room, then why are we back down here if this is so bullish? And then it started the meltdown. What we talk about all the time is when markets, and then you can make this basically one big structure. When markets break down from that structure, many times it'll retest the bottom, right? So this zone is the things I just showed you, but it's also the bottom of this balance area, right? So many times it'll come and retest the bottom and then die. Sometimes it'll retest the high volume node and die. And you can see this zone is basically right in the high volume node of this for other things. It's just amazing how this stuff matches up. But anyway, I was expecting either that or that, and I still was bearish this market. If this would have gotten through that, then I would have changed my tune again. So again, the trading is if-then scenarios, and then you adjust as things happen. Now, so this thing failed where it should have. You had a fail breakout of this structure, melts down, gaps down through this, and it's trying to hold this one. This one breaks. Again, the Grinch will be visiting everybody's stockings this year and not Santa. Because structure wise, yeah, you could make this is a one big area, but we have some ways to go to that. And then this is also a gap that happened. There's no structure here because this kind of, this is the last thing that happened. So you want to pay attention to that, and there's really no structure here. So the point is, this is where I'm looking. If this can get below here, it might happen today. So I'm expecting a small bounce here, and I will play it, even though my usual rule of thumb is if the ADD advanced decline line is under 2,000, and it's not yet, I will not take longs because this is a trend down day type scenario. But this is down far enough into a major zone. You can see this tick has been negative the entire morning, has not barely even gotten over the zero mark. So this is the NYSE tick that I look at. So this is just basically the whole universe of stocks that you want to keep an eye on for your bigger picture views. Anyway, this is a major down move, straight beeline move into an important zone. And now we have a volume setup, so I will take this long off of this volume setup. So what was the setup? That was not threshold, so this was threshold. So I have thresholds for each market that from watching these for so long, I know the volume on this SI indicator that is relevant versus not relevant, meaning tradable. And anything, my thresholds for ES are 500 stops. That's what this zone was here. And then icebergs, buy or sell, are 700. So if it's less than that, I don't pay attention to it. I don't trade it. If it's more, I'll draw my zones, and then I have a strategy of trading these zones. So this is the most current volume setup. This is a sell ice 800, and that's this zone. Again, we talk about this all the time to draw these zones. There's always issues.
Stock sell GC 166 contracts.
1 second. Bruce, why does this always come up where I get to hear everybody entering the room? I always mute it and then it always comes back. Any ideas?
Yeah. So you can go to, in Discord, in the bottom left-hand corner,
Right?
click
No, we've
on,
done this before.
click on by your name there in the bottom left. Okay, click on
Right.
that. Yeah, user settings there. Okay.
Right.
Now go to notifications on the left. You'll
I
see
think we
it.
just did this a couple weeks ago, right?
Yeah. Go up. I think it's up. Oh, there it is. Okay. So now just disable all of them. Yeah. So no, that keep that off.
Right.
And then disable all of these here, all of them. Just go click through all of them.
Yeah. I know we did this before. I don't know why this keeps. I don't want to disconnect the voice though, do I?
I think your daughter comes in and enables them all.
Yeah. Baby. Can you hear me still?
Yeah. Keep doing it.
I
These
didn't
are
know that.
notifications here, so
It's really annoying. I can tell you that.
yeah, I hear you.
So
Yeah,
this is all I really needed to do is viewer join, viewer leave. So
not really, because I went through the same
No.
thing, and like I was still getting them, and it was just like, okay, I'm done. I'm just disabling all of them. So now you can just hit escape in the upper right. There you go. Okay, yeah, that should do the trick.
All right. So So the market waited for me here, which is nice. So this volume event, this is how I trade, right? So I come up with bigger picture thesis, and we'll look at the other stuff that I look at as well. But bigger picture, these zones, which I've now labeled. I didn't know that you can. I never even paid attention that you could actually put prices on your zone. So I've had all these zones for years that I've never put the prices on. So now you guys can see the prices. So that should be helpful. So I watch these areas with my thesis, and then I wait for real-time volume events to tell me which way I should be trading. So you can see we're moving down into the zone, and we have a volume event. So that's that. NASDAQ is doing the same thing here. Let's see. So it's through its zone. So this is already Armageddon-like, right? So this ES is just at the top of its zone. NASDAQ just melted through its zone. So this is such important information. I want to be careful chasing this thing. The best trades are going to be when it pulls back to these areas. It may not get back to these areas. I'm going to let the volume events tell me, but you want to be very careful, especially after this kind of move. Doesn't mean it can't do that, but the best trades usually, especially in equities, because they always screw the shorts, then go, would be to wait for a return to these areas to trade. So the last setup in NASDAQ, this was a stop run. This was this right here. It was 185. That was right around 110.85, which was right at the bottom, right in the middle of this zone. So this is actually perfect. So if this goes as far as, it's even a better type of entry where I'll go. We talk about this every week. I'll trade these things in one of two ways. I'll either take them aggressively, meaning as soon as it breaks just outside an ATR, I will just jump in if it's an important area, or the more confirming trade is to wait for the retest of the volume event and then fail again and then get in, and then you put your stop an ATR above that zone, right? So this actually would be great if this could, this is barring something new coming in, obviously, but if this finds its way back up to this zone and then fails, that in itself is a setup, and that's also going to be a retest of this zone, which I fully expect, or my thesis, what I'm thinking now based on what it did, it's going to do one of these, right? So there's your volume event. If something else happens, then I'll trade that event. But right now I'm looking for, I would like a retest to that zone, and then I will short it. So that's where we're keeping an eye on there. And then ES, you can see it's bouncing off of this zone. So what's probably going to happen, because again, one, this is a pretty big move down without any kind of pullback. Two, they always screw the shorts before they continue lower. So everyone's jumping in here short. It's going to do one of these. I expect to move probably back into this zone and then one of those. That's what I'm expecting. If something different happens and I get volume events that start showing me bullish tendencies, well, then I have to adjust. But right now I'm looking for shorts. I'm going to be very careful shorting in this zone. I want to see this break this zone like NASDAQ did, but we'll cross that bridge when we come to it. And then the other stuff I look at, and I will, right now, I would go along this setup too, because remember, like I have a thesis that we're going to zero. I've been saying it every day in my room since 2021, but my thesis is, that's just my opinion. I let this real-time volume tell me what's going on. So if this turns into a bullish setup, meaning this can get above here more than an ATR, and I get a retest and I get a failure, I will take the long there. I'm a day trader. I'm not expecting some big move higher. I'm not expecting something like this, but I will go long that setup here, and I'll probably be getting out there because I am a day trader, right? So I'm just letting the real-time volume, which is the most important factor in trading, let me know which way to trade, right? So when you do get volume setups that are in the direction of your thesis, that's when you can trade bigger, aka an A+ setup, right? When we talk about this every webinar as well, where you want to be risking, and we have the spreadsheet in my trade room, and we'll get into this, but you want to be risking a certain amount on every trade, regardless of your point size. So that's how we, I just showed you the zone. So we enter our zone prices in here. We enter in the current ATR, And then we have a couple different strategies that we're trading, but this is the position trading strategy where it tells me where I can get in and get out based on this zone, right? So we'll come to this in a second, but the point is you want to put in your account size, and you want to only be risking about 1.5 to 2% of your account size on each trade, and you should not be losing more than 6%, 5-6% of your account size in a day. So what I was getting at, if you have a thesis and you start seeing setups that are in the direction of your thesis, well, you could trade bigger as an A plus setup, right? So I've told you guys before, I was when I got back in the game, when I first started using Bookmap, I was going to trade stocks, and I was studying.
S&P Icebergs 718 contracts.
All right, so we got more buy. Now we got buy ice here. This was sell ice. So now this, I always revert to the most recent setup, right? So we're going to draw this zone, and we're going to trade off this, and this is into that zone, and we have buy ice. So this could bounce right in the zone. If this breaks, you can say goodnight. This thing's going to at least down to the zone today would be my guess. So anyway, my point is when I was learning how to trade stocks, I was learning with SMB. They're more of equity type traders, and they harp on, they literally ground their traders if their traders don't have their A plus setups. So everything's aligned with their thesis if they're not trading bigger on their A plus setups versus their normal setups, right? So the point is you can trade bigger on individual trades. You could bump this up to 4%, but you're basically, 3/4 of your risk for that day. Remember, I said don't lose more than 6%. If you lose that trade, you basically got one bullet left, and you should be done for the day, right? So there's nothing wrong with trading bigger, but you do not want to be violating that 6% of your account size in a day. You cannot be losing 10, 15, 20% of your account size because you will blow out your account eventually. It's going to happen. You're going to have a day where everything's going wrong, where you're on tilt emotionally and you're trading bigger and you're like, and then you just say, screw it. And you're just, everybody knows what I'm talking about. That's trading for any period of time. And then you just start throwing on size. You're like, well, screw it now. What the hell? I'm already down 20 grand. And then you lose 80, 90% of your account. Then you wake up the next morning and you say, what the hell was I thinking yesterday? So just take it from me, take my millions of dollars of beatings when I didn't respect my loss rules, and put something in place so you don't blow out your account. All right, so that's my rant for that today. So, when you're drawing these zones, again, I have these bubbles on. I used to draw them to the bubbles, and then I realized that I took this off right when I got Bookmap because it was annoying me, this price line, but it's very important. So you just right click on these bubbles, go to last price, click on that, and then when you're drawing your zones, you take the bubbles away, and you can see the actual traded price. Because the price line is in the middle of the bubbles. I was drawing to the bubbles for a long time. So this is way more accurate, and you can see this spiked right here. So you get your cursor, and you want to incorporate all the prices that happened in that spike. So that spike started here, that price went up to here, so that's going to be the top of the zone, more than likely. And then we're going to come and follow this down here, and you can see this is where this ended, and this price was involved in that. So I will do that. And there's your zone. All right, now we bring back the bubbles. We enter the values in the spreadsheet, and then we decide which way we're going to trade this puppy. So the bottom of the zone's 38, 35, 50, and again, this is proprietary. Please don't email me asking me for this spreadsheet. This is proprietary of my trading room. You're more than welcome to come in the trading room, and I do this every day. I trade live every day. Actually, that was the top of the zone, sorry. And you get access to all this stuff. 38, 35, 50. Bottom of the zone looks like 31/4. Yeah, 38, 31/4. So that is the volume event that I am going to be trading off of based on how the market reacts to it. Make sure the ATR is correct. ATR, this is just a 5-minute Wilder's ATR default on Thinkorswim, 6.04. You can get them on basically any trading platform. So this starts to tell me where I can, again, this is our one thing that we do, our one strategy we're doing in the room, and then I'm trading position trades on the Bookmap webinar. So this is telling me where I can either go long or short, where my stop should be. how many I can put on based on my count size and how much I want to risk on the trade. So, for this one, I don't have a strong conviction I might be buying it, but I'm certainly not going to be trading more than the 2%. Yes, we're in an important zone, but these markets are not looking promising, right? And you can always judge too by, I know it's pretty obvious since we did this, but how the market reacts to these important zones, it tells you everything, right? So if this was truly bullish, it should have bounced. If it was truly bullish, it should have bounced. It may bounce here, but I'm still expecting that, right? So I'm fully expecting a screw you move, which I will be prepared for off of this zone. But I am waiting. If we get retested into these zones, these are going to be really high percentage shorts. And that's what trading is. It's percentages. Nothing is guaranteed. There's no indicator that's 100%. There's no indicator that's 80%. I know people say, oh, I'm an 80% trader. Well, if you're risking 1 point to make 2, yeah, maybe, but you're still going to grind yourself down and so on and so forth. I'm not going to go down that rabbit hole rant today, but the point is trading is percentages. That's all it is. We talk about this every week. Maybe we'll get into this if it's dead. This is directly from trading in the zone. I harp on this in my room every day. I tell my room members to tattoo this on their forehead so they don't forget it, or on their thigh. We'll go into this, but it's basically learn to trade an edge like a casino. That's all you're doing. I know you guys have heard me say this before. We'll come back to that probably if I feel like ranting, but that's all trading is, guys. You get your edge. So my edge is understanding market context, knowing these important areas, and then also the Ludwig levels. We'll get into that, and then waiting for real-time volume events to confirm what I'm seeing in my important areas. That's all it is. And I know I'm going to have losers. I know I'm going to have winners. But with the edge, which is the SI indicator with the real-time volume events, I know over a series of trades I will be profitable. Doesn't mean I'm going to be profitable on this particular trade. I could lose the next 5 trades, but I know over 50, 100 trades, I am going to be profitable. That's why you need to pace yourself and trade the correct amount on your trades so you can capitalize on that, on the variance when your losers and your winners. And if you have an edge, you're going to have more winners over the long run. And that's all trading is. So you have to be patient, follow your rules, follow your risk parameters. If you have an edge, you will make money. And that's what he does this exercise in the book. You can, again, get the book. And he talks about, here's the exercise. It's just basically back testing. And he even says in here, the purpose of this exercise is to convince yourself that trading is just a simple game of probabilities. And this is not me. This is directly from the book. At the micro level, the outcomes to individual edges are independent occurrences, right? That means I could easily lose on my next trade. And random, right? At the macro level, meaning a large series of trades, the outcomes over a series of trades will produce consistent results. If you have an edge, you can be the casino. If you have an edge, it generally puts the odds in the favor of success. That's what I show you guys every week. This is the edge, bar none. It's the strongest edge I've seen in 23 years of trading plus. Right? There's no better edge out there, in my opinion. And then again, if you can put this into areas that you think are important, whatever you're trading with now, if you're not using this and you think it works, well, it's going to work even better if you can understand how to trade these zones or these volume events in your areas, right? So, and I've proven you can just trade these events in a vacuum and still be profitable. I did that last December. I was going to try to do it this December, but I've kind of gone off track. I've been aggressive a couple times, but last December, just to prove to my room without looking at anything else, no market structure, no zones, no Ludwig levels, nothing. All I did for the month of December was wait for an ATR move outside, a retest, a failure, then I would take the trade, whatever way it was. And then I would risk the other side of which you guys are going to watch. But that's all I did for 1 month, and it was extremely profitable. So that just shows you this is the edge. And then if you can find areas that are even, that are really important, kind of like we're in right now, that just enhances your edge, right? And you can trade bigger, so on and so forth. All right, so we're just waiting for this to move out of here, figure out what we're going to do. Let's take a look at, I just want to see something here. We'll take a look at our Ludwig levels. Like this is in big trouble. Again, I would love that, or even that. But this is, I'm going to say coming down here in the next, hopefully by tomorrow, because I do have some puts, actually by the 27th. They expire on the 27th, but markets are in trouble. So that's my thesis anyway. But I'm always right. If something happens in these markets, something can always happen. Again, we'll keep coming back to this to tattoo it on your forehead. The 5 truths. What's number 1? Anything can happen, right? That's why you put stops in. That's why you follow your rules, because these are markets. Anything can happen. I can't tell you how many trades I've lost on that were looking perfect, and then some kind of news event comes out and blows me out. Or not blows me out, but knocks me out of the trade. That's just what's going to happen. That's why you have to protect yourself with stops, with rules, and then you're just on to the next trade. If they come out and find a cure for cancer in the next 10 seconds and the market does that, right? And I say I was short, well, I stop out and then on to the next one, on to the next one, on to the next one. If you have an edge, you will make money overall. All right. So of course we get on the webinar and then nothing happens. So I'm just waiting there. Let's go over some of these other, actually let's look at our lid levels first. These are incredible to trade for day trading, right? So this is your cumulative delta. We'll talk about that a little bit later. So right now, the story I'm getting with my Ludwig levels and my market profile. So first of all, I want to merge this day. So if you have, these are just, most of you guys know what market profile is, but I use it in a very basic sense, pretty much like all my trading. This is one day's value area. And if this value area overlaps the prior day, then I will merge them and make a composite. And the composites are multiple days, 2 or more days, value area, right? And those are very, very powerful as well. And you can come up with a story, aka thesis, on how they're reacting to the value areas, prior value areas. So let's merge this. So we will. And these are prior composites. We'll just look at this quickly, see where these were. Okay, so this is the story that I saw. I mean, that's not hard to see, but this is what happened, right? So this was yesterday. Market opened up right at the point of control of this 2-day and launched out of here, held out of here. We closed outside. Well, what should that have done? That should have held at the, I mean, if this was a bullish market, it should have been at the most bounced off of here and then headed back up to this one, right? Because these are individual days. So these markets gravitate towards prior value, right? So if this was a bullish market, that should have headed up here. What did it do? It didn't head up anywhere, and it gapped down into this, right through it, right, and now we're almost through this one, right? So obviously that is not good. What I think is probably going to happen, because it happens 99.9% of the time, we probably get a screw you rally, and it'll probably come up to here, and this is going to be a very good area to be looking for shorts. Now I'm just going off of the market profile right now. I know I have my zones as well, and then when the zones match up with the market profile, because it's basically all the same stuff, that's when you get your A+ areas and you wait for volume events. But anyway, it doesn't mean it has to do that, but I think the better trade is waiting for a bounce to short it, right? So say this. That's my thesis right now. Or we get in here. If it gets inside this prior one, then you expect, when markets accept into value, prior value areas, you expect the other side. So this could just keep going too. So we're going to let this is why you want the volume, the SI indicator, the volume events, because it helps you get, if you're just looking at this right now, you're like, what do I do here? Is it going to bounce here, or is it going to break down and go through here? I don't know. Well, you wait and let the volume events tell you what it's going to do. And then you can trade. If you understand how the market usually reacts to the volume events, it helps give you the edge and understand what it's probably going to do, right? Hence the best edge out there. So this, if we move down a little lower, is really important. It's really nowhere in this context as far as structure. There's nothing here, right? Like this was the gap, just like ES. There's really nothing here. But on this chart, this is an area. We're coming to it here shortly. But pretty much 11,971, right in this area. That is an important area where this market may do one of these. If I get a bullish signal there, I'm gonna go long. and I'm going to play for that, and then I'll go short, right? So we're kind of right, this is kind of no man's land. So let's see what happens when we get down here. And I'm pretty sure a volume event will fire off in this area, and then we can make better judgment. But my point is, if you're just staring at this chart, you have no idea. You're like, okay, I'm just gonna buy here when it touches here. Yeah, you may be right. You may get lucky, or it may just melt right through. Well, I will almost promise you, there's gonna be a volume event there that will make a much better judgment / decision, right? And then we got blue lug. I don't know why this isn't universal cursor for me. So the blue lug is pretty close to the bottom of this this profile here. It's maybe about 30, less than 30 points away. So basically what I'm saying is if this gets through here, you can expect that, and then that's pretty much right around that same area, right? So that's going to be an area it can bounce to. But I mean, it would not surprise me one bit after what just transpired, especially because everyone is thinking Santa Claus rally, oh, this has gone too far, blah, 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 that don't understand. You get these buyers, that's just going to fuel as they puke them out. I think we're coming down to this today. That's what I think. Could be completely wrong, could hold, and then recover. Well, I'll change my tune when that happens. But right now, I want to be short, is what I'm saying. So now I just sit here and I'm patient and I wait. You can see we're just, this entire webinar, we've basically been sitting in this zone. So I need to wait. I'm just not going to throw on a trade, right? I need to see movement out of here to decide which way I'm going to trade this. I hope it's down because that's my thesis, and I'm going to, just step on the gas. But if it's up, then I'm going to trade to the upside. Any questions on any of that, Bruce?
Yes, we've got some questions in here. So let's see here.
Pouring a beer, by the way. I'm just kidding.
Drinking
Just
and
kidding.
trading. All
So
right.
it's only 8:46 here. It's a little too early for beer. Even though if I was on a golf course, I would be drinking right by now. Usually 2 or 3 in already. So
Really, like the third hole, second or third hole, you'd
yeah,
be in. All
I
right.
I play so much better when I'm drinking beer. So much better, or drinking something. All right, so this was just in crude. We'll go over this too. Go ahead and fire the question as I draw this on.
So yeah, there's a question on if Alejandro is asking if you can give a hypothetical example of a trade with 2 or 3 ATR. I mean, that's not what you do, but that's the question.
A hypothetical trade of a 2 or 3 ATR.
I guess I don't know, Alejandro. What are you trying to get at? Maybe a higher or longer term trade. He has also other questions on the strength level bookmap indicator.
Actually, I don't even have. I gotta put that on. I forgot to put that on because I'm just
Okay,
starting to
yeah,
watch
he
it. You
doesn't
guys
use
came out
that,
with them, man.
Alejandro. In fact, what he uses instead is the stops and icebergs.
Oh yeah, strength level is synthetic icebergs, right? So and it's not. It gives you false positives. So that's why
Yeah,
this is 100% accurate. Bruce can speak to that more than I can, but
yeah, we're basically like the stops and icebergs with the MBO data and rhythmic and CME is very extremely accurate. And these are native CME iceberg orders. It's different than a synthetic or heuristic iceberg. Now, and that's what the strength indicator does or tries to find. Now, just to try to, make this more down to earth and speak English here, or just clear with language, it just means that these are iceberg orders from the CME. For example, TT, Trading Technologies, is a platform. They offer an iceberg order, and they also offer co-location. So those will not show in the MBO data from the CME. We don't know what those are unless you're, TT, and you will only know from TT. But there are many people using synthetic icebergs. They're off the exchange, taking place somewhere else. Okay, so
right. But it's more expensive, correct?
oh, I'm sorry.
It's more expensive though, right? For firms to do a synthetic versus just doing it through the CME?
Yeah, I don't know the details on that, and cost analysis or whatever, on all of that. I just know we just know from the CME, right, and the MBO data, market by order data, right. So and we can also determine stops from that. All right. So let's see, all trades market buy. So yeah, Johnny is asking if Scott, do you use limit buy and sell orders for entry, or are you always using kind of a market?
Yeah, I mean, I'll usually stop into a trade.
Yeah, me
You know,
too.
so say this, like, I'm watching this, if this goes like this, I just, especially if I'm on webinars, I'll put my order in. I'll just put a buy stop to enter the trade. But yeah, so say if you're like looking to, say you like to trade it right when it comes back to the zone, you're willing to, again, guys, I would love not to risk more in my trades, but I've learned the hard way by just entering right when it comes back to the zone, that it's just as likely just to rip right back through it many times. So I do know when it does that, it's a much higher percentage trade. So that's why I wait for that. But my point is, yeah, you could just put a limit order in the middle of the zone. Yeah, I'll do that too sometimes, right? I don't want to take this trade yet. I'm going to make sure that this is right. But yeah, I'll use limit orders, but I usually stop into my trades. I just buy stops or sell stops just so I don't miss the trade.
And just to be clear on that, like, then that data is considered a stop, and that'll show up on the stop run indicator. So we don't know if it's a buy stop to enter, or a sell stop to enter. But typically when you see a string of stops, we know that a lot of people are getting stopped out of the market, and it
You
is a
can stop
stop run.
into a trade. You can enter a trade with a stop like I do. But when you see large, like you said, like this right here, this is probably not somebody entering. These are guys
Exactly.
puking
Exactly.
their long positions. They're like, get me out. I want to get out at any price. Get me the hell out of here. Right.
Yeah.
And then there's stop market and stop limit as well. So you can put in, I'm going to put in, if you put in a stop market order, you're like, this is the price I want, but I don't care where it swipes down to, get me the hell out of the trade. You could put a stop limit in and say, okay, I'll put it in at 77.68, but I only want to have a 10 tick stop limit. So say the market swipes like this. Well, sometimes it would do that and you would get filled all the way down here. If you put a stop limit in, you're like, I'm only giving it 10 ticks, and if I don't get filled, I don't want to stop out, which I think is crazy because like you can literally, if this thing just gaps down, it'll never fire off. Your stop will never fire off, and then you're still in the position. So I always use stop market. I don't use stop limit. What is the point? Like, I know you're trying to avoid the slippage and getting screwed and watching it do that, but you're also really risking if something bad happens in these markets, or good, whatever. You're risking never getting out of the trade. No thanks. I'll take my slippage and move on. Right. So just be aware of their stop, and I think you guys have it on here now too, right? Limit and stop limit.
Yeah, it's up there. It's always been there.
Okay.
Yeah, you can put in a stop limit if you like, but maybe consider that for entry. But I wouldn't use it for exit, like Scott said, because you might not get filled.
Yeah,
And you
definitely an entry. Yeah, if you don't want to swipe up and getting filled at terrible prices, but if you're trying to get out of a trade, I would not be using stop limits because you may not get out of the trade.
Yeah, yeah, very
Some
very
you know,
dangerous. It'll skip right through it, and then you're stuck. What's the point of having to stop at that point?
right, exactly. And if
Uh,
you don't think that can happen, it could happen. And you
any That's the one part of the learning curve. You think, oh, that'll rarely happen. Well, it'll
get,
happen. It's gonna
it will
happen.
happen.
It will
Right.
happen. And you should be prepared for it, and you'd have some sort of safeguard in place, because it will happen. Amazing things are gonna happen.
Right.
Unbelievable things are gonna happen.
I wouldn't call them amazing. It doesn't feel so amazing when it happens against you. Unbelievable would be the word I would use. Not amazing. Amazing, I think, is positive. Wow, that was amazing. I just lost 40 grand. That was
Yeah,
amazing.
yeah. It is well, unbelievable is the right word. It is
Unbelievable, right?
unbelievable, and you think, oh, that's so low probability. Well, you'll find that all it takes is a few of those things to blow out your account.
Exactly.
So yeah, safeguards. And so Luke has an interesting question here about larger traders that trade maybe 10%. I think, yeah, of the entire volume, I guess. I don't know, kind of like how you were back in the early 2000s.
Right.
But are they still using volume events to determine? So I'm just reading out the question. Determine their position, or are they trying to look for algorithms to take advantage of?
I mean, no idea. I mean, you have to work at the firm to understand the strategy that they're using, right? But these firms can see exactly what Bookmap can see if they're plugged in and they have the right. I shouldn't say exactly because Bookmap obviously has some special talent that can decipher this information. So that they have this information is be able to write the programs and the software to decipher this stuff. But I mean, you don't know what strategies they're trading off of. Some are different algos. I did work at a firm. The last firm I worked at, it was called Wolverine Trading. They're still around. They're actually it's a pretty large firm in Chicago. And they were almost all algo writing. I mean, but there was like, I mean, the trading room was just enormous, and every different section had a different kind of algo or a different strategy they were working on. So, yeah, no idea, right? You don't need to know that stuff either. As far as even this stuff, it's like when this first came out, people are like competitors, and I'm doing air quotes because there's no real competitor to Bookmap. And Bookmap is any competitor out there that's trying to decipher, show this stuff. Bookmap is times 1,000 as far as I'm concerned that I've seen. But anyway, they're trying to discredit this information when it first came out, and the way I was deciphering it because they didn't understand what the hell they were talking about. They're like, they thought I would say, "Hey, if you see a buy iceberg, you want to buy." Well, that's not the case. I have specific strategies and specific names for, an iceberg. It's called the Titanic. And I also have a specific strategy and name for if this doesn't hold the market. It's called broken ice. I know it's very high tech, but, um, so my point is just because you see buy ice, it doesn't mean the market's going up. Yes, you want to know what the big money is doing. You have a much higher chance, remember talking about probabilities of this market holding and going up, but they're wrong too. I mean, what happens if a bigger house comes in and just hammers this market, right? So then they have to get out. So the whole point is understanding these volume events and how they should react and the trade-off of them. But it is not just, hey, buy ice, I want to be a buyer. Yeah, it's good to know. But here's my question right now. So you get buy ice and you get all these buy bubbles. These are just market buyers all tried it here, tried it here. Well, why is it not doing that? Why are we back here? Right? That's the stuff that you're going to glean from this, where you're ready. Okay, yeah, the odds are this should hold after this, but now I'm seeing all this and it's not really responding. This looks like that to me. That's on top. This is just real time stuff. That's on top of everything we talked about on the market structure, right? So again, yes, you have a higher percentage of this working for you, knowing the big money's behind you, obviously, because they're the big money, but they're not always right, right? And we have specific ways to read these where you take advantage of them, right? So my point is, don't use your mental energy trying to understand what these guys are even doing. So that's what I was getting at too, as far as, if you see bias, that they were saying, well, Scott's saying that it's just automatic buy. I never said that. And then they also said, well, you don't know what this person is doing. They could be getting out of a long, they could be hedging their options. Absolutely. And you're never going to know. So why are you going to waste your mental energy even trying to figure it out? It doesn't matter. What matters is this is a volume event. This is concentrated volume. For this to fire off, these are hidden orders in the order book. Somebody had to be selling it. Somebody is loaded up right here, both ways. Whoever bought here, whoever sold here. Now they're holding their breath. When it moves out of here, that's the move of the guys that are wrong getting the hell out of the trade. Simplistic, but trust me, that is what's going on bigger picture wise with this volume, right? Yeah, there's algos playing games all day long, but these volume events are algo disruptions, right? Algos, 80 80, 85, 90% of the time, you're getting algoed. Everybody knows what that feels like because it happens nonstop all day long. When this kind of big money comes in, it disrupts the algos and they'll get run over, and then big money will be done, and then they'll go back to algoing you, right? So this is all part of their trade plan. They know there's going to be times the big money comes in. Obviously, they take their loss and then right back to this. So just like you should be trading, you have an edge, you take your loss right back to the next trade. So my point is, please don't waste your time trying to understand what this iceberg is. Just know it's here. Know this is the area that it occurred. Know somebody was selling it like crazy, trying to push it down. And they ran into a mouthful of buy ice. Also know whoever bought this, you have to view it in this aspect because you don't know what they were doing. When this market moves out of here, just assume they need to get the hell out. And then when you see not only that information, but you see all this buying and the market did not move very far up, but couldn't even get an ATR out of the zone, that's very likely going to happen. Okay? So that's why I say and know that the real-time volume is the driver of all these markets. I don't care what you have on your charts. I don't care what magical price that you think it is. Unless you have this kind of activity to confirm it, it doesn't mean much, right? When you have this activity in an area you deem important, like I already said, at a magical price, then you have an edge. Right? And that, once you start looking at your areas, right? So like a lot of traders love trading VWAP. I trade the bounce off VWAP. It's not even on this one. Should have been on here. We'll look at the David on that chart. And there you go.
686
Guys, this is what goes on, right? So it's like, not saying this was just this house puking right here, but look at all these buyers. They're like, oh crap, I got to get out. Right? That's what we're playing for. So this is a new volume event. Didn't really do much, but now we're going to draw this zone and we'll play off this zone because it's the most recent. If you have volume event after volume event for the position trading, you can make it all one big area because these are still loaded up traders in this area, right? But we'll draw this current volume event. You can see the swipes. This is Global Plus. You want to get Global Plus because it shows you all these different indicators. Pardon me?
Sweeps.
What I call them, swipes.
Yeah.
So swipes is what they are. I'm just kidding. I call them swipes. So anyway, that was that. You can see that with the dark bubbles, and then this was where it occurred, right? So now we're just going to trade off of that. It's not much of a difference as far as our prices, but
Scott, just I'm hoping to shed light or clarity on this. Like, Scott is looking at volume events here, and very specific and particular volume events based on stops and icebergs. It's even more kind of transparent depth into what's exactly going on here, but it is a volume event, and this is no different than we had Trader Aid yesterday looking at volume event in the first half hour of trading. And you guys know that follow Tom B. He's looking at the initial balance within the first hour of trading. Again, these are volume events because most of the volume is taking place in the first, hour, half hour, whatever it is. Scott is looking at very particular volume events within the trading day, making decisions upon it. So I hope that sheds a little bit of clarity on, first off, what Scott is doing, and then secondly, it answers a question here about Luke had about some of the larger players in here.
All right, so that was the stop run, right? So many times stop run isn't real selling, it's just guys puking. So it's probably all these guys that were buying in here. Some of them just puked it out, right? These guys that thought they had it, even if they said, hey, look at that big bias come in, I'm going to start buying. And then it moves down here like, oh crap, got to puke, right? So that if right now at this exact moment, if this market's truly bearish, this should not get an ATR above there. This should not clear back out of the zone, right? It should do that. If it does do that, then I'm going to be looking to go long, at least temporarily. I have a short thesis but I am a day trader, and this is telling me the real-time volume. Again, like I said, you have no idea if you're just staring at this what, I mean, yeah, it looks like it could be a support, but you don't know for sure, right? This tells you, if this gives you a high percentage, doesn't tell you for sure because nothing tells you for sure, but it tells you a very high percentage. You know, hey, if this was going to break that zone, well, first of all, I should have seen some aggressive selling, and I should see, if I do see a stop run, this should just hold, aka a stop and hold. This is one of my 6 setups, and it should move lower. Well, why is it rejecting right off of there, right? So it may not be ready to break right now. So I'm letting the real-time volume tell me instead of just guessing on a chart, because that's all you're really doing till it really moves out of here, and then you know, and then it's too late, right? So we have our prices. I'm not going to be aggressive here, and I'm very reluctant to go short, to go long, just because as far as the ADD, it's right at 2,000. Remember, I tell you guys, this is the advanced decline line for the universe of stocks, 5,000 plus stocks. Well, it's showing me out of the 5,000 plus stocks, 2,000 are declining, meaning they're lower than they were at their close yesterday, right? So when you get minus 2,000 or plus 2,000, that is a trend type of day. So you got that information. You got this information. This is the tick, and this is the NASDAQ tick. This is the NYSE tick. All the stocks in the NASDAQ, all the stocks in the NYSE, they do overlap, but I have both of them. And this market has spent most of the day under the zero line. Very important. And you can see it started out extreme. This means it's programmed. So if you start seeing values of 1,400, 1,100, 1,200, that is those program selling, like big funds liquidating stocks. You want to pay attention to this stuff, right? So my point is, will I go long? Yeah, it's very borderline. This is right on the, I don't usually take longs if this is minus 2,000 or greater, right? Because that just tells me, yeah, you're going to get pops, but they're going to be very short-lived, right? So, but I've seen enough here where I may take this long, and here we go, right? So, but I need to see retest failures. So this is another aspect of it, which is more of a conservative entry. It is the conservative entry, right? So an ATR above this zone, I already put the zone prices in. I already put my ATR in. ATR above the zone was 38.36. That's right here. So this is an official bullish setup. So if you love that zone, this zone, you could say, got my setup. I saw a buy ice first. I saw a stop run that didn't continue. We're in a zone. We just moved an ATR. I'm going long right now. I would not give you a verbal lashing if you're a part of my trade room for going long right here, right now. Right? And a normal day where it doesn't look like Armageddon, the ADD is not close to 2,000, I would probably take this trade long aggressively, meaning as soon as it got just outside an ATR, and that's what these prices tell you, which the actual entry. So if you want to go long right now, this is the price, 36.75. That is 110% of a 5-minute ATR. This is one ATR. This is 110%. 36.75 is your entry. You stop out 110% below the zone, which is 22.25. Right? So if I was going to be aggressive, I would be going long right here, right now. What I'm going to do, because of everything we've talked about this whole webinar, and I still think this market's going to get killed, but I will go long because this is the real time volume is telling me take a shot on long. If this comes back, remember playing off of this stop run zone. I already know there's buy ice here. But if this comes back, this retests this zone, we move back out of here, 110% of an ATR, aka 38.36.75, I'm going to go long, and then my stop's going to go in 110% of an ATR below there. And I know it. So many people on this webinar are saying that have never watched the webinars. Well, what the hell? I don't want to be risking. I can't tell you how many emails I get. Well, when I trade, yes, I like to trade. This is one of the rants, so be ready. You guys have heard it a million times. I like to risk. I like to put on my trade, and I like to risk 4 points to make 8. Who cares? The market doesn't give a flying you know what you want to risk. What the market cares about, volume events, right? And being able to push an ATR out of there. So I am not going to let myself, and or you get long and you trail your stop, or say you get the market starts moving in your favor and you trail your stop to break even. That's just silliness. That's just that. What do you think these algos are programmed to do? They're programmed to take out terrible traders. So my point is, when you put on a position, you get your stop outside of the volume event. And From watching thousands and thousands and thousands of these, I've determined the best way to not get algoed is to put your stop outside of an ATR from the volume event. Yes, it's a bigger risk trade, and it tells you right here what I'd be risking if I end up going long here. I'm risking 14 and a half points on this trade. All you do, it doesn't matter. I don't care if this is 50 points. This adjusts, right? So if I'm risking 2% of my account size, this tells me how many I could put on. If this was a 50-point ATR right now, okay, that never happens, but it does get up to 20. See, 20 happens in NASDAQ, but that means I can only put on, it's the same. Now I'm risking 45 ES points. Oh my God, it doesn't matter. It's adjusting to the volatility, right? So I can just put on 1.41 and it's the same amount of risk, right? So that's what you guys have to understand. Stop it with your static stops. Stop it with your trailing stop. What do you think? Why are these firms in business? Because they know that's what traders do, and they take your money all day long, right? And this is almost retesting the zone. I'm just hoping this is the bottom of that ice. I just wanted to get a little lower here to retest the stop run, and I will take a shot at a long. But it's like how many people just got long here? Say you wanted to be aggressive at that 36.75, the aggressive entry off of the zone. You got long, and you're like, oh, I'm only going to risk 3 points here. You're stopped, and then when this goes up 50 points, if it goes up 50 points, you're beside yourself the rest of the day, and you're like, oh my God, what did I do? Please, if you learn anything from these webinars, get your stop outside of the volume event. Please, begging you, stop giving your money to these algos. Why do you think, it's not, this is my opinion, but why do you think the CME started letting this information be known, right? This is my opinion only. Pretty sure I'm right, but because they wanted more transparency in these markets, because the retail traders were pretty much non-existent like 5-7 years ago. It was just algo, eat algo. There was no fresh meat in here to take your money, aka fish. You ever sit at a poker table? You always know who the sucker is. If you don't know, the sucker is you, right? So like when you sit at a poker table, you know the bad players, they call them fish. Well, you guys are the fish when you do this nonsense. So they started giving this kind of information to help the fish kind of compete so they can give their money.
Stock sell NQ, 184 contracts.
What did I just get filled in? I did my usual that I do nonstop. And I forget to cancel my orders. All right. So here's some NASDAQ. We'll go there in a second. So this is key right now, right? Nothing fired off in here. This is from before. So first and foremost, you see why I have aggressive versus conservative entries. I was not, yes, this is an important zone, but I wasn't sure this was going to do that. And here we are. So if this is bullish, this should hold for right, I'm talking short-term bullish, this should hold and move higher. This has a chance. This is why I wait to get in. So right now, I'm going to put this in here. I'm not getting in this zone. I'm waiting for it to move back out of the zone. That's my confirmation. 5.86 should be pretty much the same entry here. Entry is, that's the wrong strategy, 36.75, the same. I could put on 4.41. I usually round up. I'm gonna round down because I really don't want to be long this, but I will because the volume is telling me to if this comes back out of the zone. So that is the entry price. That would be the conservative way I trade these zones. ATR, retest, failure, I'm in. You don't see me get in right here. I can't tell you how many we've seen in my trade room the last month. You get a setup, it moves the ATR, and then it goes right through it. That just tells you what the environment is as far as bullish, bearish, right? But that's why, guys, I learned this the hard way. I used to get in, and even in my course, I talk about, this is before drawing the zones, and I wasn't using reset mode. I was using exponential. It's still very relevant, right? Understanding the setups and so on and so forth. But things I've adapted over the last 2 years, and I use it a little differently. But I used to, like, as soon as it would move out of the zone, I would get in and I put my stop just below. Well, I learned the hard way. That's not the best way to trade these, right? Just like the best way to trade these isn't to wait and just pop in the zone. Yeah, it could hold and go, but you're risking that. So why would I'll just, especially if I have a bearish viewpoint, I'm going to wait and get in here. yeah, I got to risk another 7 points. I'd rather get in 7 points than just jump in and take a loss, right? So now I'm waiting for that. So now I'm just going to wait. If this blows through here, I cannot take a short. For me, my strategy, because this was able to push an ATR above here, I don't take shorts because it showed enough strength to get an ATR above there. So meaning the short idea for this setup is done. I will not take it a short in here until I get a new setup. I will still take the long, provided this doesn't get an ATR more than ATR below here, or an ATR below here. If this moves an ATR below here, then this is now it's holding, and this is the pattern over and over and over and over. And I know that because I've watched thousands and thousands and thousands of them. So that's why I trade them the way I do. Yes, I would love to put on trades that I risk 2 points in the ES. It's just not feasible most times if you don't want to get algoed out of the trade. All right, let me draw this. If there's any questions while I'm drawing this stop run in NASDAQ, and we'll trade off this puppy too. This is right. Go ahead, Bruce.
Yes, there are some questions, Scott. Just
quickly, let me show this real quick.
Okay.
You can see where we're at here, right? So we get a volume event real close. We just talked about this. It's the bottom of this one, and it's the top of that one. So this could hold for right now, but I'm going to let. So this is what I'm talking about. So if you're trading this, you're like, oh, this looks like a really good area to go long. I'm going to go long. Well, yeah, maybe. You might be right, but I enhance my chances if this setup turns out to be bullish, right? So that's what I'm going to draw. Go ahead, Bruce.
So yeah, just off of what you were just talking about, seeing this over and over again, Alex is asking, what's the success rate of this strategy?
Success rates for the ATR retest. So I do have my traders. I've been having big time problems with it, going back and forth with these guys. I do have here. I've had a little bit of drawdown, but I still stand behind this trader sync, but I just had, like you see, I have not put a trade in because the thing was not, it was reading my trades incorrectly, so on and so forth. So I should have some solid stats for you right now. I usually show this, but it's just been, I've had so many problems with this lately. I would say the winning percentage of that is probably, it doesn't show winning percentage. Let's just look at what I have right here. But see, the problem is a lot of these trades, this is what I'm going to be better at next year, because a lot of these trades are, I don't have it separated, and I do have a virtual assistant going in there, adding in all my trades, but I don't have stats of a aggressive entry, meaning I enter in right outside the zone versus that. I would say, just off the top of my head, by waiting for retest failure, it's probably close to 70% would be my guess. I don't have those stats. I need to be better at it, because this just shows me every trade that I've made, and so many of these losers were being aggressive. But I've gone through since I'd say September, pretty bad drawdown. Let me get this off here. I don't need to read that. But anyway, I got this virtual assistant guy going in here, and of course this isn't in here. It's supposed to be in there, so now he's going to get a verbal lashing today. But he's going through all these trades and putting in all my charts. So I don't have an exact answer for you on that, just off the top of my head. I would say 70+%, but I need to start marking that. Actually, I was for a while. It's just so tedious with my room coming in here and putting in. So watch. Let's see. See, I don't have. Actually, I did have some aggressive entries. Let's just see what that pops up. See, I only have 3 trades in here. This is aggressive entry. I don't think I have. I mean, this thing, it could be fabulous. I just had so many problems with it, with the rhythmic data. I don't know what, and I keep going back to them. So I'm giving him one more chance to get this fixed. If not, I got to move on. I just can't. I want to show you guys information right now, and it's just not accurate because it's not. But these are all like these setups. But I don't have the. I don't have aggressive versus not aggressive. So off the top of my head, I'd say 70%. It's definitely a safer trade, right? It's inherently safer, right? Because it's moving out, it's retesting, it's not busting through, and it's moving back out. That inherently is telling you it's much more likely to work. Why do I even use aggressive entries? Well, we've seen many times, especially in crude lately, you'll get a setup and the market just won't come back, like this, say for maybe this one, right? So if I'm waiting for so say this is an important zone, which it was. Let's just look at this. Actually, I should be aggressive right here, and I'm missing this trade. I got through here a little bit, but so say we move. When I will be aggressive with my trades is if say the market pops up here, comes into the zone, and I get a setup, and it just runs away from the zone. I'll get in aggressively, right? Because I know how important that zone is, so on and so forth. So the problem with waiting for ATR retest failure, yeah, it's a much higher percentage trade. Sometimes you're not going to get the retest and you're sitting here beside yourself that you didn't take the long, you knew it was going up and you waited for a retest, right? So that's where you have to use that's where it gets subjective, where you say for the stuff you're using, if you're using these volume events, and still didn't get filled on this, by the way, this is why you guys, are you watching the algos at play here? This is why I put this where I put it, because I'm not playing their game. And I just learned if the market is able to push outside of an ATR after a retest, I have a much better chance. And these algos just will snap it back, snap it back. How many traders just got long? They're like, oh, screw Scott, man. I'm gonna get long right here. I'm gonna put my stop right here. Stopped. Stop, stop, stop. That's why I do this. Does it mean I can't get stopped? No. But I just know if this market is able to push an ATR, retest, push outside of an ATR, I have a very, very good chance of this thing moving higher. And that's where I put it where I do. That's why I didn't enter it right here. So that was a long-winded response to no, I don't have those stats, but I'm going to be much better on the new year for aggressive versus retest, and then everything else, zones, and then we're working on. So I'm trying to make my room a lot more actionable for traders too. So I'm going to be doing a lot of these. You can see here. Let's give you a quick example of what we're doing in there. So if you go in my room, and then you go under playbooks. Right, so when you come in here, you get a couple of my playbooks and the template, right? So let's see if this works. It should, right? So you get access to all the ones that I've done, and then I used to do playbook webinars where guys would get on and present theirs. I'm probably going to start that up again, but I'm going to have a good 5 to 10 solid playbooks accessible to my room, because so much of what I've done, I'm really bad at this. And then if you want to be a great trader, you need to do this, right? You need to do. This is everything in the bigger picture. What the intraday look like. Your technical analysis. So that would be like, the structure and the zones and so on and so forth, right? Then you need to take screenshots. You could just imagine, like, this is a lot of work, but you need to do this work if you want to compete with the brightest minds on the planet. My point is, this is, I do my 2 webinars a day in my trade room, and I'm doing all these other things. This is just, I got to get better at this. I know. So I'm going to make these 5 to 10 of these for my room. I want you guys to learn how to do this for yourself. I don't want you mirroring my stuff. I want you to be taking this information and building your own, but I'm going to have this much more actionable where you can have this information and then kind of build off of it, right? So playbooks are key. And because what I was trying to get at is I've been doing this for so long, I can just know, okay, we're here. I want to go long based on my thesis, right? Instead of, this is playbook A, B, C, D. But I'm going to get better at that because I want the room to be more actionable of what I'm doing, so people understand. Because I just assume people are always knowing because I do explain it, very clearly, in my opinion, right? Like the zones and how I trade the volume events, so on and so forth. But I need to have it more laid out for my traders, and that's what I'm going to be doing in the new year. So, all right, next question, Bruce.
Let's see here.
All right, looks like I'm about to get filled on this long. I'm not very excited about that. I was hoping that it would die, but that's what it is.
Brandon, not sure what you're asking. Get info on what? I mean, Scott has a course here. I'll put it into the chat here, so you can reach out to Scott directly. All right, and so
I think that. Hold on one second. But
yeah, Alejandro was asking actually on your worksheet there was a 2 and 3 ATR strategy. So that's
proprietary. That's proprietary to my trade room. So you join my trade room, you learn. I go over this every day, and explain this, and we trade this all day long as well on top of the position trading. And this is way, way more active. So if you're the type of trader that needs, I hate to say needs action, you will, especially the one ATR, you're going to be getting action. But yeah, this is proprietary. I mean, it's one of the perks of my room, right? Like, you know, people pay to be in there for my knowledge and the way I trade. And, you know, there's some things that are just for that, you know, for my trade room. So I'm more than happy to share it. Just got to be part of my trade room. On these Bookmap webinars, I'm trading the position trading strategy. 1 second, let me put this zone in. So like it filled in the ass. 11,050 is your top of your zone here. It's going to be lovely if I'm long both these markets when I want it to go to zero, but that might happen here. 199 I mean 25. 25. That your current ATR is very, very important because this is telling me the volatility of right now, 20.90. It means it's basically in every 5 minutes it's rotating 21 points. Very important information. Very important information where you know how to place, where to place your stops, where to enter, so you're not getting whipsawed, so you're not getting algoed. So for this to move an ATR out of here to be a bullish setup, I needed to see, or need to see, 1021.50 or 11,021.50. Hey, look at that. That was exact ATR. Who knew? Pretty close. Didn't quite get there. Missed it by 2 points. So this isn't which is fine because I don't really feel like being on both these. But that's my rules, right? So this has to touch 1121.50 for an official ATR, and then I'll go long. But this one did not. So, and that also means that my short is still on the table. If this were to get an ATR above here, then the short is disqualified, and I wait for a new setup, right? But you'd be amazed. This is what the strategies that I have in my room. That the other strategy on how many times when it gets real close to one ATR or at an ATR, it comes right back to the volume event. That's the whole idea behind that strategy. So you guys see, like this is what you deal with if you just are hopping in and out. You're getting whipsawed to death right now. That's why I put it outside of an ATR, because I know how these markets trade. Any other questions, Bruce?
Let's see.
This is crude. Let's see if I would have. Did I miss a trade here? I don't think I did.
No, I think we're all caught up here.
So this was. So I need to see 7801, which we've gotten to, but did it get to there and retest? No, close, but it did not. So meaning, so this did retest the zone like they pretty much always do, but it just didn't get a full ATR. 7801 was a full ATR, but it did retest and reject. This market did not reject just randomly off of the zone. It's because it knows this volume event occurred. I mean, you would be amazed. The more you watch it, you're just like, oh, this just happens nonstop all day long in all these markets, right? Stop runs fires off. Almost 500. Market moves away, comes back, holds pretty much the exact tick, right? So I tell you guys every week, right? This is how I trade them from watching thousands. You want to be, aggressive, and you're like, you know what? I'll go long here, but I want to get in right at the bottom of the zone, and I'm just going to risk just outside the zone or an ATR outside the zone. Fine, you can do that. This is the science. The way I trade them is the art. So if you want to change, which I'm completely fine with, if you find a better way, I'd love to know it, right? If you say, Scott, my win percentage is every time something fires off and moves out and then moves back in and I get in right at the bottom of the zone, my win percentage is 78%. I'd love to hear it, see your results over a long series of trades, not just a couple trades, right? But you could have gotten in right. I mean, look, it's not a coincidence this market came right to where this ended, moved out of here almost 30 ticks, 25 ticks, and then came back and stopped right there. right at the zone. It's like magic, isn't it? Well, that's why. So anyway, now this is an ATR. Now this is what I'm talking about, what I'm risking. I wanted to see ATR retest to go long. This market may be gone. And I was waiting for that. I missed the trade. So this is where you have to decide based on what you're looking at. Hey, this is a great area. I don't need to see retest. I'm in right away and I'm going long right away. Versus I'm going to wait for that, like I'm doing with the ES, right? And if you decide to wait for that, you may miss the trade. So you have to be okay with it. Or you just say, I'm waiting for retest on every trade, every setup, and if I don't get it, I don't get it. Right? Because it's also not like just in this market. It's not a coincidence this market is just bouncing around in this area. This is where the traders were loaded up, right? It's not a coincidence. It held pretty much the exact tick here, moved out. So now we just wait, right? I don't chase anything. I know my prices. The only thing you want to pay attention to is if the ATR is changing, you got to change your price. So the ATR is 5.19. When I put in that order, it was at, this is not the right market, 5.86. So this is going to make a difference. So watch this entry price change. I get in at 36.75. Well, now, since the ATR is shrinking, because this is a terrible time of day to be trading, it's where algos really eat you alive. Now I'm at 36, so that's 3 ticks lower that I'll enter this trade based on the current volatility of the market. And if I get filled, now my stop price is probably 3 ticks higher. I'm stopping out at 23. I could put on 5 now because the volatility is shrinking. So now I will put on 5. Again, I'm not excited to be long these markets, but if this markets were bearish right now, you should be seeing bearish setups. You shouldn't see this area hold. So I'm a day trader. I will go long. I'm going to be very quick to be getting out. Meaning if we move into this zone, I'm probably going to be out immediately, aka a major Ludwig level. So say this thing holds this zone, moves up to here. I am not messing around with it. If we move into this zone, I'm out. Just because I know this is very likely to do that. But we have to screw all the shorts first, because that's how these markets work. If you know all that, you're ready for it. And then I didn't really get into these yet. These are the Ludwig levels that I use in the room. I've been using them for almost 2 years now. They are absolutely nutty, incredible on how well they work for support and resistance, especially when you get a volume event at these areas. It's crazy. Right? And you can also come up with thesis based on how the markets react to the lugs, right? So when you form new lugs, the market should hold prior blue, new yellow. New yellow is the directional yellow. And you can see this one didn't even sniff the yellow. This is telling me that's going to happen, right? On top of everything else, right? So you can see, you start to piece together all your thesis. You come up with a thesis with your market profile. You come up with a thesis with your lugs. You come up with a thesis with your market structure. If everything lines up, you want to be trading that direction, right? And you could just eliminate the one side of your trade. Many traders, and it's not a bad idea, right? If you can be patient, many traders just eliminate one side of their trade. They say, I am not taking longs. I don't care what happens. I'm not taking longs today. That is not a bad way to trade. Most traders can't do that because they want to be involved on every single move, right? But if you could do that, you would be a much higher percentage trader. It just amazes me how we get on these webinars and the markets just stop trading. All right, so this, like I said, did not get the full ATR. So my above here, so my short is still in play. If I end up going shorter, I'm going to wait for that because actually, because of that, this looks like I should be aggressive, right? We just talked about when you decide to be aggressive versus being conservative. I'm just looking at this. This looks like I do not want to be risking retests of my volume events. But again, I look at multiple things. Pretty simplistic, but I do look at multiple things. Here we are. We're at this important level. So do I want to be aggressive out of that zone, knowing this is prior composite, multi-day composite there, this high, and then the low of this? I don't want to be aggressive into that. Doesn't mean I won't short it, but I need to see ATR retest failure. Then I'll go short. So you see what I'm saying? There's times where you want to be aggressive. So say we were down here. So say we had the same look on that bar chart I just showed you, and we're breaking out of this. And here's the volume setup. Well, yeah, there I want to be aggressive. See the difference? So that's where it gets a little subjective in your trading. Now, the ATR trade we're doing in my room, it's pretty much mechanical. All right. So those of you that love to be mind numb and don't like to think for yourself and just love to mirror and blah, 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 which is, I don't agree with, like I said. But this is, you just put your prices in and it's telling you exactly where you get in, you get out, where you exit. That's it. And you don't, there's really, we have maybe one or two things that we look at to stay out of the trade. Other than that, there's no, I don't care where we're at on these charts. It's a whole different type of trade. So there's nothing wrong with that type of trading either, right? I mean, you may not like position trading. You may like that type of trade. It's more of a scalp trade. That's fine too. And I'm actually meeting with Bruce after this webinar to learn this a little more, this Trader Map Pro, because remember last week, or I think it was last week, we couldn't get it working correctly. So once I get that down, then I have literally like 30 different strategies that I'm going to start to introduce to my room that have been rolling around in my mind for a long time. And I know, especially Bruce is so giddy about this thing, I know I'll be able to find some edge in this as well for different types of trades, right? It doesn't have to all be, all I show on these webinars is the one position trade, but we're doing another trade in the room and there's going to be way more behind that, right? Where you can be engaged in these markets pretty much at all times. But right now on these webinars, I'm just showing this. What was this here, by the way? That was not threshold, but this was a sweep, aka swipe, 263. That's not that many, but it's good to know. So all stops are sweeps, but not all sweeps are stops, right? So sometimes you'll see sweeps and then there's no stop run, right? You want to pay attention to them, especially if it gets, this is one of the, this is global plus, this is the sweeps indicator, right? That's what you get there. Especially if you see, like the other day, we saw like 1,400 sweeps in NASDAQ. That is where you can literally draw, that's a volume event as well, right? You can draw that zone and play just like we play the SI indicator zones, because these are traders getting run over or taking a shot and then being wrong. It's the same stuff over and over. It's about trying to take advantage of where traders are caught. That's what we're doing. That's what I do. That's what I've always done. And I know how to do that. It's not hypothetical because I know how I used to react when I was a big trader and I was caught, or how other traders would react when they were caught, because you can see who you're trading against back then, which I tell you, this all stuff I've talked about before, but I know there's new guys on here. All right, so it's 9:30. Isn't your other guy getting on here, Bruce?
Yes, yes. Tom B is up next, guys. If you want to continue the education, he's a volume profile trader. Great stuff, Scott. I mean, I think the clarity on your setup and waiting for it and the patience here, you see this every week. You're looking for something very specific. And I hope others see and understand that, and that can resonate. This is something that we've seen as a theme many times over. So you can see the patience that Scott has here. Let me see.
And you have to be patient. You have to come up with your own system and be patient and have your rules and follow your rules, right? My rules are I trade these a certain way and I'm waiting. If this doesn't and this breaks down, I'm waiting for a new setup on to the next one, right? So you can see I didn't just jump in here all giddy. If you did, you're being tortured. You're being algoed. Really fun. It's complete torture. Even if I get filled, doesn't mean this isn't going to happen. But I'm forcing this market to push outside of an ATR for me to get in this trade. If not, they can do this for 4 hours. I don't care. Right? That's the whole key. You have to have a system. You have to have rules. You have to have an edge. And I'm showing you the edge. How you develop it is up to you. And then you wait and you employ it. And over a series of trade, if you have a legitimate edge, you will make money. I can promise you, if all you do, if you're new, you get the SI indicator and all you do is wait for ATR retest failure and take the trade, put your stop outside of an ATR the other side, you over a series of trades, you'll 100% be profitable. I'll put my name on that, right? I did it again. I did it for a full month last year. But you can enhance that by finding important areas, so on and so forth, like we've talked about. But this is the edge. There's no bigger edge in futures trading than understanding these areas where traders are loaded up, so on and so forth, or what direction they're trying to get this thing to go. This is it, guys. And if you understand how to trade them and the best way to trade them, you just have to follow your rules and you will make money. You will be profitable. All right, that's all I got. No trades again today. I mean, it is what it is. I mean, I wish I could put on 10 trades for you guys, but if I'm not seeing what I want to see, I don't force trades, right? I don't trade for action. If I want action, I'll bring up a horse race and bet some Gulfstream or something, right? This is not action. This is trying to, I make a living off of this. I've got to follow my rules. And if I'm not seeing what I want to see, I don't trade. And here we go. Like, this is about to die. Now, for hop off, I'm watching what's the price where I will short. Remember, I said I need for this zone. We never got the ATR above, so this short's still effective. And really,
stock sell NQ 170 contracts.
That's a new setup, so that setup's done. But I was going to say, really surprising, we took out both these bands of liquidity. So that's the one thing we didn't talk about. I talk about it every webinar. When you're coming up with your thesis for the day, you want to see where all the liquidity is. You see it's like black hole up here, liquidity is down here. These guys are going to get filled. Why? Because they'll make themselves get filled, because they'll push the market into their orders. That's the game I used to play all day, every day. So that's how I know what they're doing. So when you're looking at this, find your liquidity levels as well. Not this liquidity. These are algos. I'm talking liquidity that's been in here for a long period of time. So I'm going to draw that zone. I'll trade off of that. And you see how I avoided a loss here, right? This was looking, you had buy ice, you had sell stops. It couldn't push lower. Did I just jump in? No. And I just saved myself a losing trade because of my process. Right? Now I'm just waiting for something new. You got a spot gamma level here. And I'm going to hop off, but quickly, let's just take a look at the hero. So you guys can get this, obviously, spot gamma. If you get this real-time hero, go to my website. There's discounts to everything that I use. For this, you get an extra free week of a trial. So instead of 1 week, you get 2. But this is important to watch what these options, the short-term options, are doing. I think I have this set up. No, I sure don't. I don't know why this keeps changing on me. So this is today's expiration. You see, and we talked about this last webinar. This, when you see straight lines, he talks about this all the time. That is big money. Whoa, what the heck just happened there? Hold on. Why did that just change like that? Or that must have just come in. What's the time on this? Yeah, that just came in. So this was what I was showing you. Now this is even bigger. So these are the games that are being played now, where these big players will load up the options dealers because they know the options dealers have to hedge. So all you really need to know, if it's going up, it's bullish. If it's going down, it's bearish, right? So we're going down. Somebody just swiped a bunch of options. Now what we've been seeing too in my room, we've been talking about it all the time. It's happened many times lately, where you'll then see, so they'll load up the options. Think about how easy this would be to manipulate the markets. I talked about it last week, like I said. They'll load up, you saw that move. That means they're buying deltas, whatever, selling puts or buying calls. Well, the dealer's on the other side of that. So the dealer is selling them. The dealer has to hedge themselves. The dealers don't screw around. They don't say, maybe we'll go down. I'm going to hold on to these. They have to get out. So think about what a great strategy would be if you can manipulate these markets. You buy a boatload of options, deltas, bullish, and then you come in and swipe the market. These dealers have to chase to hedge. So that looks like that's exactly what's going to happen right here. So more information, important information for you, right? I don't want to get into that. We got to get off now, but that's something you want to watch. Options players are a huge player in these markets because they have to hedge their options positions. So it would behoove you to understand what's going on in there as well. We talk about that in my room. There's actually a couple people that took his course, his most recent boot camp, and they know a lot more than I do. I try to keep it simple. I'm using these as support and resistance. But when you see, quickly, I don't have to get off here, when you see that move at an important area, that move meaning that options move I just showed you, at an important, this may just hold right now, right? So I know that information. Now if I got a new setup, I'm going to, did we get an ATR below here? No. So this is still alive for my, well, let's just one more check before I hop off here. Make sure the ATR is correct. figure out if I'm still going to go long at that price. It's actually 5.56 now. Get an ATR below there, that would be 23.25. And yes, we did. Hey, that's not a coincidence. I'll show you real close. Let's see. There you go. That's not a coincidence, guys. That's why we have the strategy. Right there. That's one ATR. Right back. So my point is, it got an ATR below that volume event that we've been looking at for the last hour and a half. So now this isn't disqualified as a long. Now I have to wait for a new setup. All right, I'm done, Bruce. I'm done. No trades again. Sorry, but get ready for Armageddon. Get ready for the Grinch to steal all your Christmas presents if you're long.
Sounds wonderful. Merry Christmas.
Merry Christmas.
Okay, well, sounds great. Scott, are you going to be here next Thursday?
Yeah, I'm here the rest of the year.
Okay.
So
Okay.
I don't know how good a trade it's going to be next week, but I'll be here.
Okay. Okay.
Now
Excellent.
that I'm doing anything anyway on these, I think this is like the third webinar I haven't really put a trade on. But it is what it is. I mean, I can't make the markets trade.
Oh, you put a trade on last week. It was just at the end there, and it was an excellent trade. I mean, that
Of
worked
course
out.
it was.
It was
I don't think
unbelievable.
I don't think I ever lost, actually. I don't think I ever put on a losing trade before.
I mean, that you captured a huge move to the downside. That's where that first break took place, that higher time frame. But
Right.
yeah, it was beautiful.
Seems
So
like it was like 6 months ago. I
yeah,
remember.
yeah, exactly. So, well, thanks so much, Scott. We'll see you next Thursday then.
Yep, I appreciate it. Everyone have a Merry Christmas. And I do this twice a day in my trade room. If you want to come by and watch me get tortured like this most days. All right, I'll see you guys next week.
All right. Thanks, Scott.
Thanks.